Hey everyone, welcome to another weekly Forex forecast for the week ending June 26, 2020. My name is Justin Bennett with Daily Price Action, and in today's forecast, we're going to discuss the Euro USD, the Pound USD, the Pound versus the New Zealand Dollar, as well as Gold or XAU USD. And last but not least, I'm going to change things up and talk about Ethereum or ETH USD. We're going to look at how the pound could fare against the New Zealand dollar, as well as a gold breakout that seems to be just around the corner. And that last one, Ethereum, I'm treating more as an investment over the next few years, but I'm going to show you why I think that the gains there could be phenomenal. All right, so let's get to it right now. Quick disclaimer that today's video is for educational purposes only. All views are my opinion and are not intended as investment advice. Forex is a high reward, high risk business, and you should not trade with borrowed money or money you cannot afford to lose. See the description of this video for the full disclaimer. Before we get started, be sure to hit that subscribe button and also click the bell icon so you get notified every time I post these videos. Also check out the join button where you can become a member of this channel and receive 5 to 10 analysis videos from me every single week. I'll show you the key levels I'm watching and how I'm approaching that pair, so you'll get trade ideas from those videos, but you're also going to learn how I trade price action, and that's going to make you a better trader. First up, we have the Euro USD, and as you can see, the pair finally broke that 112.30 level last week, which was previously serving as support. So notice through this area, it was support, it then broke down on Thursday, and 112.30 became resistance on Friday. Now, as I mentioned last week on the blog, I still think that 111.50, this area down here should attract buyers. If that area fails, look for a move all the way down here into the 109.90, perhaps 110 area, which is essentially a confluence of support based on this horizontal level as well as the bottom portion of this ascending channel. Alternatively, if we see the euro recover back above 112.30 on a daily closing basis, that of course would be a bullish signal and could also send the pair back to that 114 area. Now, there's one thing happening here on the intraday charts that make me question whether or not we'll get a large rotation lower. If I look at the 4-hour time frame, notice how we have a bit of a falling wedge forming here. Now, it isn't perfect because the upper portion of this level isn't really getting tested in recent days, and that could be a sign of weakness. But like I said last week, until this level down here, just above 111.50, until this area breaks on either a 4-hour or daily closing basis, you have to be careful shorting the Euro USD because we could easily get a bounce from this area in the coming week and head back to 112.30 to challenge that area as resistance. So the bottom line here is that until we get a daily close below that 111.50 area, this pattern here is intact. And if we do see the euro rotate back to 112.30 and also take that out on at least a 4-hour closing basis, we could see the euro USD head back to the 114 region. So right now there's a lot of indecision happening here, but we could get an opportunity in the coming week. So this is one to keep an eye on. So the pound USD failed to hold above that 125 area that I mentioned last week. If you saw last week's video, you know that I said that this pullback looked a little too bearish to try to buy the pound at this area. In fact, I even said that we could see a bounce from here, but expect that bounce to fail and close below 125, and that's exactly what happened. So Thursday's close, just like the Euro USD, broke a key level, and for the pound, it's this descending channel from back here that is still somewhat a factor. Now, I'll be the first one to say that the price action here is not ideal, even for swing trading. So even though you could play some of these swings, the market right now is really just sideways, and I don't love the technicals because while resistance is pretty obvious, I do think that this area up here, the bottom of this previous channel, should attract sellers if we get a retest this week. However, support's a little more difficult. So I can make a case for the 122.40 area, which was support back here. It then flipped to resistance and back to support. So 122.40 could attract buyers this week along with that 120 area. But again, the technicals here aren't clean enough for me to play this, which is why as of right now, I have no interest in trading the pound. Furthermore, the pair is nearing all-time lows. Remember, this was an all-time low back here. And I don't love trading a market at all-time lows or highs because it does become more difficult to find structure and identify likely profit targets. So this one's going to be a little more difficult, but for the time being, I do think that this level up here just above 124 could attract sellers, with support coming in at 122.40, followed by that 120 handle. The last time I spoke about the pound versus the New Zealand dollar was back in March, when the pair was challenging the bottom of this smaller ascending channel. And what I said back then was that a close below this channel could open up the bottom of this much larger channel that dates back to 2016. And at the time I said that area was around 189, we can now see that it's closer to 190. But nonetheless, this trade has played out perfectly. So if I zoom in, you can see where the pound against the New Zealand dollar did break that ascending channel on a weekly closing basis. It then retested it as new resistance and sold off from there. So for the weeks ahead, keep an eye on 190. That's going to be the support area to break. And as for resistance, 194 is the level I'm keeping an eye on. Notice back here it served as resistance again here, and then it flipped to support on a couple of occasions. Furthermore, you can see how recently 194 was a factor through this region. So 194 is going to be resistance and 190 is support. Now, as I mentioned last week on the blog, just looking at the monthly time frame, I have to favor a breakdown from here because for the last 20 years, the pound has been moving lower against the New Zealand dollar. In fact, the last two multi-year downtrends spanned 12 to 13,000 pips each. And what's interesting here is if I treat this as a bear flag, so this larger channel, if I treat it as a bear flag, the measured objective here based on this high and this high here comes in at 125. Now what's interesting, remember that these two downtrends back here spanned between 12,000 and 13,000 pips. And from this high up here down to 125 is approximately 12,800 pips. That would align with these two downtrends back here. So this is a pattern for the pair. This is something that it's done for the last 20 years. I'm not saying it's going to happen because there are no guarantees, but this is absolutely something to keep an eye on over the next couple of years. And while I know you're not going to hold a trade for 2 years, this does lay the foundation for whether or not you want to be a buyer or seller. So if we know that this is a pattern for the last 20 years, we can then move into the daily time frame and assume that if 190 does break, at least on a weekly closing basis, that the pound could lose even more ground against the New Zealand dollar. Thus, we want to be a seller. All right, so watch 194 as resistance. Any kind of bearish price action from there could set up an opportunity to get in early for a break of 190. But again, the bottom of this channel is the one to break on a weekly closing basis. That would expose the 183 area. So I've talked about this range on gold for the last couple of weeks, where support comes in around 1680. Notice back here it was resistance. Gold then broke above it, and ever since that time it has been support on a daily closing basis. The top of that range comes in right around 1740/50, and as I said last week, it is going to take a close above the 1750 area in order to expose higher levels. Now, one thing I want to point out really quick, and you may have noticed it already, is recently, over the last few weeks, we do have what could be an inverse head and shoulders. While this is typically a bottoming pattern, it can also serve as a continuation pattern. All right, so notice how back here we have a left shoulder, we have a head, and also a right shoulder. So if we do see XAU USD close above that 1750 area on a daily closing basis, look for a move higher into 118. So I showed you last week why 118 is a factor. And if I go back to gold's all-time highs from 2011, 2012, you can see where 1800 was a key factor for several months. And really, if gold does break above 1800 over the coming weeks, there isn't much to stop a run at gold's all-time highs just above the 1900 handle. So for the week ahead, this range is still intact as of Friday's close, but given the pressure that we're seeing on 1750 and these higher lows into that resistance area, I would not be surprised to see a break above 1750 as early as Monday or perhaps Tuesday. A close above 1750 would take on that 1800 area. Alternatively, if we see a rotation lower from 1750, look to the 1680 area as support with a break there exposing 1630. And last but not least, we have Ethereum. Now, I flipped over to TradingView for this one because I don't have access to this on MT4, But I've talked about Ethereum once on the blog as well as Bitcoin a few times. And really, this for me is more of a long-term play. I'm looking at the next few years here because I do think that cryptocurrencies, digital assets, decentralized finance, blockchain, etc., that is the future. I truly believe that this is the next iteration of the internet and that it's going to be massive. So when I look at Ethereum, there are tons of use cases, but one that you may have heard of recently is decentralized finance. And I'm not going to go into all of the details about decentralized finance in this video, but just know that Ethereum is essentially the #1 platform that decentralized finance apps or DApps are being created on. So this is really a play on that movement, but instead of risking money on specific apps, you're essentially investing in the platform or infrastructure to make those apps work. I've also spoken recently about why Bitcoin is gearing up for its next bull market. So Bitcoin moves in 4-year cycles. And in my opinion, we're months and perhaps even weeks away from that next 4-year cycle beginning. And when Bitcoin moves, everything else is going to move with it, including Ethereum. But I personally believe that Ethereum is going to outperform Bitcoin over the next few years, which is why I'm talking about it today. So now let me show you what I'm watching on the chart. So I mentioned this falling wedge pattern on the blog a couple of weeks ago. And as of right now, the market is still holding above the top of this wedge. You can even see if I zoom in where the current week found support right at the top of that wedge pattern. So we had this candle barely broke that area. This next week confirmed it. We then had an inside week and we then tested the bottom of that wedge as new support. And as you can see, we had a nice bounce there. So personally for me, anything above $200 is an accumulation period because I think that Ethereum can head much, much higher. I really think that Ethereum can head much higher than its all-time highs. But in the near term, this is something I talked about a couple weeks ago on the blog where 350, this is the area to keep an eye on. In fact, I would argue it's the most important level on the chart because 350, as you can see back here, it served as resistance. It then served as support and resistance again. So if we see 350 break, that would essentially be a breakout of this entire range over the last couple years. So I'm very bullish here, but I do think that 350 is the area to break. If that breaks, there isn't much to stop a run at $800. You can see back here it served as resistance, support, and then resistance again. And of course, above $800, we have the all-time high, which depending on the exchange is somewhere between $1,400 and $1,590. But longer term, guys, over the next couple of years, I can absolutely see Ethereum taking out its all-time high and heading up to $5,000, perhaps even $10,000. I know that may sound crazy, but you have to consider that this previous bull run back here, from this low at 42 cents to the high above $1,500, that was a 380,000% run. Now, I'm not saying that that will happen again. There are no guarantees, but I do think that a move into 350, 800, and the all-time highs right around $1,500 would be just the start here over the next couple of years. So just remember that I'm not trading Ethereum or Bitcoin or VeChain that I've mentioned on Twitter a few times. These are longer term plays for me where I'm looking at the next 2, possibly 3 years. If you enjoyed this video, give it a thumbs up, leave your comment below, and be sure to subscribe to my channel. See you next time.